In this video, you'll be learning about this topic.
All right, guys, I want to transition into some of the questions that we had from Twitter. I posted we were going to have this conversation, and we got a ton of questions for both of you guys. This one is, I think, a really common question that a lot of people have. For an average guy, in your opinion, is it better to invest in mining or just straight up buy Bitcoin?
I think buying Bitcoin's probably better, but if the execution risk is high, that's all I'll say, right? Harry, you got to be able to execute on actually plugging this in and doing it at a price that's profitable.
Listen, you really need to think through very carefully if you have the chops to do it yourself. There are some service providers out there who do a good job of hosting your gear for you. But again, like unless you've properly allocated to Bitcoin within your perspective on the asset, I wouldn't start looking at mining on an individual level.
Because of the competition.
There's a lot of mistakes that can be made along the way. And you wind up have the intent of getting into mining that you're going to mine all this Bitcoin, and it can take you a lot longer to plug in that machine, and it may not make as much money as you expected because your electricity costs are higher than you thought they would be. And then the actual like servicing the machines, knowing when to replace fans and how to work with the hashing boards. It's not something you just jump into and understand right away. Baptism by fire. You got to learn a lot of hard lessons to understand how to execute. Have these. I mean, the goal is to have these Bitcoin miners are essentially physical Bitcoin options. You want up and running as long as possible. You want them to have the highest uptime that you can possibly get them to have. And if you've never done it before, there's just a learning curve that you're going to have to go through. If you're looking to accumulate a certain amount of Bitcoin, like Harry said, probably better off buying just so you can get in before the price runs up anymore.
The other like intricacy to it is like each of the, like exactly what Marty said about I think about the rigs basically as Bitcoin denominated assets and specifically options. They kind of play with whether or not they're a bond or an option, but they do have this option component to them where there's this uncertain expiry. So you're constantly living through a period of time decay where Bitcoin price can go up and protect your margins for longer. But on average, hash rate goes up. Machines get more efficient. People find cheaper power. Over time, the number of sats that your hash rate will produce is going to go down. And so you're living through this period of time decay where you hope that price continues to appreciate so that you can run at a profitable margin. But the sats that get produced, it just isn't going to be there as long as you think. And it's a total uncertain variable. So you have to be really thoughtful about sort of the dynamics at play within the framework on how you think about it, because you really are spending quite a bit of fiat to accumulate sort of this decaying sat revenue stream. And then how do you integrate that into sort of your approach to fully allocating to Bitcoin in the way that you see fit for yourself? You need to think about it within that broader context before you make a decision like that. It's not like just starting a business.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.